Hey everyone, and welcome back to a fundamental video on investing on the stock market. Today I'm going to be covering one of the most popular topics and one of the ones I get the most questions about, which is dividend. Now there are many forms of dividend, but I will cover the basic one, which is the one you get from holding stocks and shares of a company. So without further ado, let's get to it. Now, dividend is a cash payout you get from holding shares of a company. It's basically a reward from a company to its shareholders for simply holding their stock and being on their team. Now, this payout is taken from the company's earnings, and depending on how big a company is or how much they earn, they can pay a higher or lower dividend. Now, a dividend is only paid out if it's authorized by the company board, and the board can choose to lower and increase it whenever they want to, or cease payments altogether. So that is the bottom line for dividend. Now, usually a company takes most of its earnings and invests back into the business in order to grow its earnings and profits. But sometimes they think that paying a dividend is a better move, and sometimes playing nice with investors and showing potential investors that there's some dividend to be gained by becoming a shareholder can turn out to be a good strategy as well. Now, a dividend is usually paid out quarterly, monthly, or annually. So it's usually paid out 4, 12, or one time a year, depending on what the board decides. But by far, the most normal way to do it is paid 4 times a year, so once every quarter, and just about 90% of dividend paying stocks will pay out quarterly. So you get the cash into your broker's account 4 times a year. So if a company or a stock pays 2% dividend, that means you get 0.5% of your total holding paid out in cash, spread over 4 times a year for a total of 2%. Now, one important thing to remember when we're talking about how much dividend is paid out is the fact that it changes all the time. Now, usually a company will steadily increase its dividend over the years, but sometimes it can go down, and that can scare away some dividend investors out there. So before you pick which dividend company you invest in, it can be a good idea to look at the company's track record and see how long they've been paying a dividend, their ability to keep paying that dividend, and for how long they've been increasing it. Because if dividend is what you're looking for, these are some important metrics to check out. Now, a dividend is usually paid out by larger or well-established companies. These companies don't have to spend all the money they make on growing because they've done much of the growing already, and they're more focused on profitability, having huge profits, and they can't spend all that profit on the business, so they pay out some cash to investors. So usually stable companies pays out a dividend. And not only that, but paying out a dividend can make a company a more stable investment by nature, because no matter what happens, you get paid the dividend. So usually companies paying 2% or more in dividend are larger, well-established companies, although it varies from sector to sector. For example, tech companies almost never pay out a dividend, while industrials or utilities pays a lot. Now, on the other hand, small growing businesses where the potential for capital appreciation is huge and the stock can double or triple within a couple of years usually don't pay out a dividend, and that's usually the way to go because they need to grow as fast as they can and spend all the money they make. So you have to sacrifice dividend for potential capital appreciation. I mentioned that a couple of sectors do pay out more dividend than others, and some of those are utilities, which are quite defensive, oil and energy companies in general, as well as automakers. And a lot of and banks as well, especially European banks, does pay a huge dividend. So that's something to keep an eye out for. So companies like AT&T, JP Morgan, Ford, Kraft Heinz Company, and so on pays a huge dividend. Now, a couple of terms you might want to get familiar with before you start investing in dividend. It's not very important, but these are a couple of dates concerning dividend. You might want to check these out. So dividend will usually have an announcement day, an ex-dividend day, a record day, and a payout day. And a lot of people ask, when do I have to invest to get the dividend? When can I sell and still get the dividend? When is the cutoff for dividend payout? These days will explain all that to you. So if you're looking to buy a stock and get the next dividend payout, you need to check out these dates. Now, one important thing to note, and one thing that most people don't know about dividend, I'll let you in on a little secret, is that the price of a stock fluctuates according to the dividend announcement or payout. So if technically this almost never happens, but if a stock is trading at $60 and the company announces a 2% dividend payout, the stock will immediately go up 2%. So it's going to go up to 61.2. Now, when the company pays out that 2%, the stock is going to go down 2%, so down to 58.8 or whatever it's going to be. So the dividend, when it's announced and paid out, is immediately added or subtracted from the stock price. So don't be alarmed when the dividend is paid out and the stock goes down in value. Now, when it comes to ETFs and index funds, they pay dividend the exact same way, but they pay their dividend based on their net asset value, so how much money is in the fund, rather than their earnings or profits, because they're not a company. So the dividend paid by an ETF or index fund is just the same as a company's, but it's paid based on a different pot of money. But the dividend is the same, but the dividend comes from the ETF and not the companies. So you're not receiving dividend directly from the companies, but rather through the ETF or index provider. Now, one of the benefits from dividend is cash flow. When you invest in dividend and you get cash flow 4 times a year, you can spend this money on buying more shares, buying shares of other companies, or paying off expenses, either life in general or investing related. Now, dividend has also showed to actually produce the most return, even more than the stock price actually going up. And some studies suggest that over the last 25 to 30 years, so since 1990 or 1985, dividend has accounted for as much as 2/3 of all gains from the stock market. Now, there are different numbers out there, but it has been shown that dividend paying stocks perform better. This is because no matter whether the market is down or up, the dividend paying stocks will pay a dividend, but they will still move with the market. So if the market goes up 10%, most of the dividend paying companies will also go up 10%, but they will also pay a 2% dividend. When the market goes down 10%, most of the dividend stocks will do the same, but they will still pay that 2% dividend. Now, the stock does fluctuate, but that dividend can be used to buy more shares and accumulate more in that way. And if the stock price of a dividend stock goes down, you can simply reinvest the dividend right into the same company at a lower share price. Now, on an end note, I get a lot of questions about dividend. What I will say is dividend is not what makes a great investment. What makes a great investment is a good company. So look at the company first and don't think about the dividend first. A dividend is just a treat on top of all rest. So don't be blinded by dividend. And I would also stay away from really high paying dividend investment, like 5% or higher. There are certain oil companies, speculative companies, utilities, some funds that do pay extreme dividend like REITs, but I will stay away from those and find companies paying a healthy dividend between 1.5 and 4% somewhere. If it's higher than that, it's usually a bit suspect. So don't be blinded by dividend, but it is a great way to gain passive income and to keep adding on to your positions with the cash you get paid out from the dividend. So dividend is good, but it's not everything. And if you're buying a stock in an individual company, the company is the most important thing, not the dividend. Because if a great business can go up 100% in 1 year if they do well, and if they only pay, if you pick a dividend stock and it pays 2% a year, it needs to pay dividend for 50 years to pay the same as the stock that doubled within a year. So maybe you shouldn't put all your money in high dividend stocks, but also some small growing individual stocks that can double or triple or really do incredibly well for you. But the dividend is nice stability and it makes you sleep better at night. So that's about it. Hope you find some good dividend stocks out there. Ask me if you have any questions. I know I know of plenty of dividend stocks in all sorts of sectors and all risk levels and industries. And I do own some in my own portfolio, like Boeing and Lockheed Martin, as well as Waste Management. So hit me with any question. I answer almost all of them. As always, I'll see you guys in my next video.